Hey there.
Hey guys. Hey Maurizio.
Hey Scott, how you doing, man? How are you? Hi, Chris.
Hey,
Whoa.
Marshall.
It's on. It's on again.
Looks
All,
like, looks
all
like,
this fucking time and we were right.
yeah, we're getting finally, we're getting a good action, finally.
It's unequivocal now. So are you familiar with the concept of inflection points?
No, no, I'm not. I'm not.
Okay. So if you think about when is the ideal time to take a position? Theoretically, like a big picture conceptual, long, short, sideways, whatever.
Uh,
When your
Probably
risk is when your
when,
risk is small, right?
yeah, when you reach the slope, yeah.
Okay. So if you were going to take a short position, right here is the ideal time to take it, right? Because if it's a trading range, we've got three things. It's either a bull market, a bear market, or a sideways market. If it's a sideways market, it's going to do this. If it's a bear market, it's going to do that. So this is the perfect time to get short. So we should see selling pressure here. In fact, you nearly always see selling pressure at the top of trading ranges, right?
Yep.
When we should see selling pressure and we don't, you can no longer make the argument that are we in a trading range? Can't be. We're not in a fucking trading range. Are we in a bear market? No. Like we cannot be. Like if we're in a bear market, we really should have done that. Or at the worst case, done that. Or in an outside shot, done that. That we haven't done any of those three things. The market has had three times when it could have turned into a bear market and didn't. It's not a bear market. And now it's not a sideways market. So like Sherlock fucking Holmes, if it's not a sideways market and it's not a bear market, it has to be a bull market.
Mm-hmm.
And if we zoom out, this low is above this low. And this high is above this high. We have intact bull market structure.
Mm.
And the other thing I'd like to point out to you is that in any bull market, the second leg is always stronger than the first, right? In 2014, Bitcoin made 90% of its move in the last 30 days. In 2017, it was 60% of its move in the last 30 days. In every bull market of any sort, however big this leg is, you can expect a bigger leg second. So if we have this or this, however you want to measure it, we can reasonably expect same sort of thing. Probably one more pullback and a little zag to finish it off. I think that's something like that is probably the highest probability. Like we're looking at well north of 250 now. And more importantly, we can say with certainty that we're not going down here. And we know that this bottom has to hold. We also know we've got a completed retest of the lows. We've got an acceleration, open at the lows, close at the highs, expanded range. We have the lowest volatility since the top back to the lowest volatility. And you saw up here, we have a top back to the lowest volatility before it took off again, right? Mm-hmm. So these lowest volatility points, these are turning points. Lowest volatility point here was a turning point before it did that. Lowest volatility point here was a turning point before it did that. Lowest volatility point here was before it did that. and so on back to lowest volatility point here was before it did that. So we've got an extremely unequivocal, like very difficult to make any sort of bearish case at all anymore. It's on. It's just fucking on. Now, more importantly, you don't know what the chart is. What does that look like to you?
Flagging-ish.
Ish. Not confirmed yet. Like maybe soon, but not quite yet, right? Couldn't say it for certain. Like probably, but not definitely, right?
Right.
That's the monthly chart. Probably, but not definitely is what I would say, right? Now let's look at the daily chart. Lowest volatility since way back when all this shit started. Strong move off the lows, and instead of going down for a pullback, we've gone sideways. This is one of the most bullish price action formations there is, because there's two ways that price can work off overbought momentum. This is Ethereum, Bitcoin. One is by price, by profit taking it back down, and the other is just by time going sideways until people get bored. Now, Bitcoin has been bullshit strong, right? And even as strong as Bitcoin's been, Ethereum's slightly outpacing it.
Mm-hmm.
So in context, what do we have? We have a confirmed bottom. We have Bitcoin being incredibly strong off the lows. We know that moves that last a long while have strong kickoffs. We have a very strong kickoff. Secondly, we have Ethereum, which is a riskier asset than Bitcoin, going up faster than Bitcoin. In other words, people are favoring risky assets over safe assets. That switch between safety and risk taking is binary with us, right? Like you're either hunkering, you're either feasting or you're famine. You're either hunkering down for winter or you're trying to make as much as you can while the going's good, right? So this is the first little sign. It's not certain yet that risk is back in style. Now, let's go back to
in terms of breaking that pattern, like if because it's almost there. So technically, when Ethereum and Bitcoin,
but technically
breaks that high,
technically it doesn't happen till up about here. But we're going to get a clue, and the clue is going to be the form and the structure of this price action. Now, what we have now is easy on the way up. Look at this bar couldn't break the bar low, bar low, bar low. Easy on the way up, hard on the way down. If we get another leg where it's like easy on the way up and then hard on the way down, then we're starting to look at the form of this and go, okay, this one is when it hits here, it's not going to stop. It's going to bust out. But technically, we're out of the trading range here.
Right.
But we're going to get a clue first, and we've already got the first part of the clue already. So going back to the lows, the 24th of January, or these lows, let's do 24th of February, because these are probably the more relevant lows. What's working weirdly, Ethereum fucking classic. So waves stand out, but pull back really strongly recently. Ethereum's about halfway. We've got KNC and Ethereum Classic up the top. We've got FTM, Mana, and this looks very random to me. If I take out waves, just because it'll make the scale easier to read, you can see Ethereum is about the midline. We've got about half above and half below. This is not alt season behavior. We also don't have anything really confirmed yet. Like if we look at the alts that are leading, I mean, it's such a terrible coin, but it's such strong price action.
I know.
It's going to get a second leg. Crazy strong. KNC, good move off the lows, went early, out to highs. This one looks good. Luna is the closest of the layer ones to its all-time highs. And it's decreasing in volatility on the way down, which tells us that we're going to get another leg probably. Luna looks like the strongest of the layer one coins. Nia is quite constructive, but still in a channel, right? What else? Sol has some problems, becoming good. Mana, too early to say. Still decrease, still low volatility. ENJ, let's look at the rest of those metaverse coins. Stronger than Sand as well. So overall, this metaverse sector is not impressing me as like, oh wow, I got to be balls deep in metaverse shit yet. Like that doesn't seem to be the case. It also, weirdly, this fucking bucket of shit is the strongest layer one coin, ADA.
I think that ADA will have a potential. I think it will definitely at least test the highs, and then we'll see what happens after that. But yeah, that's my guess.
So its lows were at the 16th. Check it out since it made its lows. It's stronger than Sol, Luna, AVAX, Ethereum, FTM, and Luna. Like it's like, I don't know. I never would have picked that.
Yeah, a lot of development is happening on ADA on the ecosystem now.
Great. There's one that I'm looking at there called PBX.
PBX, right?
Erebus. Yeah. I don't know anything about it, but I've got friends who are like really into it on a technical level. Anything else you guys want me to look at here? And then we'll do some Glassnode shit.
The array looks very good.
Whoa! Yeah, that's on, dude. Look at this beautiful price action here.
Could we see how things are looking on the on-chain side?
Yes, please. Okay. So let's start with so let's see if I can make this smaller. So the hodlers are increasing their position, but I'm seeing some whale activity that might suggest that they're increasing their position, but increasing it at a smaller rate. I think we might see a pullback very soon.
Yeah, I was going to say that because everything looks really overbought in every level,
and the perpetual funding rate shows us that on that 1 hour perpetual funding rate, it really looks like it really looks ready to pull back. But you see here, that's a pullback coming for sure.
Yeah.
But you can see from the crypto margin futures open interest, it just got completely butt slammed during this short squeeze. So if the futures open interest is crashing while it's being short squeezed, it means everyone was short and they're getting stopped out of their positions. So the shorts will be very weak for a while. So the pullback is likely to be quite constrained just because there's no leverage in the system to accelerate it. It's likely to be pure profit taking. Now, for once, so let's look at the exchanges. People pulling their funds out of exchange very strongly on this rally. So no one's planning on selling, everyone's buying. This is the dip is in, it's hodling, it's all on. We can see the long and the short volume here. Let's make it daily, it'll be easier to see. So you can see here, we've got a huge spike in people buying for the long term. Like here, huge spike in people buying for the long term. This is what a long-term bottom looks like, guys. Okay, so we see some profit taking here. Actually, let's drop this down. Yeah, I think we're going to get a pullback. Like that is a very extreme amount of profit taking. But I don't think it's going to be a big pullback. The hodler net position change, very important. Oh, we already did that. Okay. And the miner net position change. So the miners are just starting to accumulate. When they accumulate, they're not selling. That's a selling pressure that's not happening. And supply per whale. The whales are selling out of this, but when I dug into it a bit, it's something weird. So if we look at the supply held by 1 to 10 Bitcoins, so 400 to 4 million, bought the whole dip. 10 to 100. Let's make it daily. It'll be easy to see. So they bought the early part of this dip and selling out in the last part of the dip, which is why I think that there's profit taking coming. And 100 to 1K, these guys are always selling. You don't have to read too much into that because their holdings are still pretty high. Yeah, you don't have to read too much into that. So yeah, so bottom line, I think we've got a pullback coming pretty soon. Let's look at illiquid supply shock. Because the supply shock ratio has increased. So we've got all the fundamentals in play for a really strong bull move. The highly liquid supply has gone way down. The illiquid supply has gone way up, and the liquid supply way down here. It's all lined up, guys. It's like perfect. So the short-term cost basis is, oh, look at that. We just crossed over. The short-term holders are just in profit again. So our short-term holders have an average cost price of 46K. That's significant. Like everything changes when you're back in profit, right? Yeah. Unequivocally great. On every level.
Looks interesting.
On every level. Let me. Yeah, very cool.
Is there any way to measure or to figure out what type of pullback? Because obviously that's, you know what I mean? Like in terms of how big of the pullback will be.
That's a very good question. So what is our pullback length is a function of a couple of things. How much leverage is in the system? Low leverage. What is our volatility situation? It's low. Are there any forced sellers? Are there short-term holders who are underwater who are going to be forced to liquidate their positions? None. They're all in profit. So with the absence of leverage cascading shorts and forced liquidations and people just hating it because they put up with it too long, what's left is people who've bought here.
Mhm.
It's gone from 34 to 46, which is 35% in a couple of weeks. Is 35% so attractive that you're looking to bank it and yank it?
Interesting. Mhm.
Okay, so you put yourself in the mind of a short-term trader. Let's say you jagged the bottom and you got it for 34 and we're at 47 now. You're feeling pretty fucking pleased.
Definitely, I will take the profits out. Yeah, I will. Yeah, in terms of short term, yeah.
Now, what percentage of market participants are those, considering we've got miners increasing their positions, we've got leverage traders completely fucked. We've got some whale selling. That's probably the most significant selling pressure here. I don't think we're going to get too many. We're going to get a little bit of short-term sellers and some whale sellers. So we've definitely got some selling pressure. It's not nothing. Is it enough to cause? Is it a pebble that can cause an avalanche? No way in the world.
Cool.
Hmm.
Cool.
Yeah, I think it's back on. I mean, we haven't seen a momentum effect yet. That's important. So we're seeing.
I was going to ask you about that.
We're seeing randomness. Like let's look at this. You know, we're seeing good coins and shit coins, and like some good coins at the top and some good coins down the bottom, and you know, this is all like random. So the only clues we've got so far are Ethereum Classic, as crazy as it sounds. I can't buy that. I just can't do it.
Will you buy Bitcoin now at this price? Like
absolutely.
If you have you know what I mean? Like if you
absolutely, dude. This price here. You know you're wrong if you're here, right?
Correct.
So you buy at 47 and you're wrong at 32. So you're risking 15,000 a coin. What's your potential upside? If it works out good, 250 a coin. If it works out bad, we're going to get to 68 a coin, right?
Mm-hmm.
That's worst case scenario. So worst case scenario is 68 minus 46.
Mm-hmm.
22 on 15. So worst case scenario, you've got 1.5 to 1 risk reward. Totally betting odds. Best case scenario, you've got, well, I think a medium scenario is 250 left 46, 15 is a 14 to 1 risk reward. Like it's absolutely betting odds, dude. You know, a slam dunk for 1.5 to 1 and a fair shot at 14 to 1. You don't get those kind of odds at the track, man.
250. Interesting. Okay.
Yeah, that's the way I see it.
Scott, I have an slightly unrelated question, but I think you mentioned before that you were, I'm not sure if I'm remembering correctly, but was it you were going to modify the system to go into alts when there is an observable momentum effect, or are we still using the NUPL?
We're still using the NUPL. I got something cool to show you. Feast your eyes on this. This is I'm building it out on real market data instead of crypto data, because I don't want to. As soon as you start testing things on crypto data, you're inherently curve fitting. But I've got Bitcoin data on there. Here, these are the trend following. This is the new perpetual future system, but it's running on real futures right now. And so this is the position and the position size. So it scales it up and down in real time. Rather than getting in and getting out, it's always adding to or subtracting to it. So you can see it was long from here until here. Short from here until here. Long, increasing the long position, briefly went short. Long again for this. Short, flip.
Holy shit. That's
Really good, right? Really fucking great. So what we've done.
What time frame is that? That's
This is a daily chart, but what we did is
daily chart. Okay.
we took all of the classic trend following setups from the academic literature,
Right.
and we did short, medium, and long-term timeframes, because the big problem with any system is like, what are your parameters? Like, am I looking back this far? Am I looking back that far? Am I using what moving average or what breakout level? You know, maybe,
Right.
maybe this could be just unlucky. Maybe I had a 50-day breakout. It was a 49-day breakout. So what we're doing is we're blending 6 different trend following systems, blending them all into this combined signal, which is a forecast. And then we're using the volatility forecast of Bitcoin to size the perfect size position, which comes out to this. And if you look at it, let's say, look at, I don't know, New Zealand dollar. I mean, it goes short exactly where, as a price action reader, I would want to be short. I would want to be long from here too. I would want to kill my long right there. So I would want to get long there, and I would want to get short there. It's like, it's working like a motherfucker, dude. And there's a lot of improvement to get. And this is 6 forecasts. Ultimately, before I release this, I want to have about 150 combined forecasts. I want to put all the on-chain stuff. I want to put my mean reversion systems. I want to put all my price action shit in. This is going to be a ridiculously high-performing system, like bullshit. Fully auto. It's already taking live trades on Binance IBI. It's like, this is the bot that you wish you had, dude.
It looks like it, definitely.
Yeah. So I'm so proud of this. This is the first time I've done something that really wouldn't look out of place in a hedge fund and would be better than most hedge funds.
Mm.
And I did it just by reverse engineering. One of the biggest trend following funds is called Man AHL, and they publish all this academic literature. You should see the people they got working for. They're all like, professor of maths at Oxford and professor of this at Cambridge, and they dished out basically exactly how they do their system. If you read enough of this shit and then you go search the academic papers for their academic advisory board, they're like, professor this from Oxford, this guy professor of science at Harvard, this guy professor of finance at Yale. And I just took their names and started going through the academic literature and downloading all the papers that they've ever written. And it turns out they write about every fucking thing they've ever done for this hedge fund. They just dish the whole lot, and we just reverse engineered it all. It's like exactly what they do precisely. And because their track record is public, like they actually publish their track record, I can tell how well we're doing because results center. Because our back tests match their back test exactly. Well,
That's pretty awesome.
Yeah, it's really cool. I'll send it to you later, but it's fat. And they've got $100 billion under management, so I just ripped off all their shit. So, yeah.
Is this the same system that you're gonna do the webinar on?
No. The webinar system I can show you guys is it's a 15-minute scalping system, taking 2-to-1 risk reward ratio on perpetual futures, both long and short. But what we do is using, it's really cool. You can get these funding rates histories for all the coins. So you can, look at AVAX and say, what's the funding rate right now? And so if you load up 30 different crypto perpetual futures and look, have I got a price action set up? Have I got a price action set up? Have I got a price action set up? Usually it's really problematical to trade them because you might get 10 setups. Which one do I trade? You can't take them all, right? you take the one with the strongest edge. So if we look at the funding rates, and let's look at the current rates, and I'm using FTX as data. What is the most bearish edge? Rook is the most bearish edge, and of the major coins, ZIL is the most bearish edge. So how that would work is load up ZIL USDT perp, Binance, why not? And say, okay, so we're looking for a touch of the Bollinger, a lower close, and then a higher close. Holy fuck, we got it right now. And we're looking for confirming evidence, a Bollinger on the 60 and a Bollinger touch on the 30. So we've got it. And we're looking for this funding rate to be positive, meaning there's a negative edge, meaning that if you're going to take a short, you get paid to take the short by the longs. So it's a carry trade. It's exactly the same as a carry trade for FX. So we go back to this and we go, okay, how are we going to trade this bad boy? We're going to trade it just like this. We're going to go short if it crosses here. And if it does that, we're going to place a stop loss there. And we're going to go 2-to-1 risk reward, which is 1, 2, roughly about there. And you're going to set that trade with a stop entry and a stop target and a 2-to-1 target, and you're going to walk the fuck away. Now, the expectancy for this trade on 2-minute charts on FX is 0.21 over about 2,200 trades. It's a strong edge. 0.21 expectancy is a strong edge. On crypto perpetual futures, 0.9 expectancy, unheard of. And more importantly, if I take the ones that don't have the crypto perpetual, the funding rate edge in them, you look up 200 trades, add them all up together, and they're a wash. They don't make any money. They don't lose any money. They just do nothing. So, yeah. So that's the big picture in a tiny nutshell.
Interesting.
Yeah, really cool, right?
That's cool. Yeah.
All right, guys. I'm
Right.
going to wrap it up for today. I need to eat some dinner.
Right. Man, I'm really excited about that system, man.
It's really cool, dude. Yeah, I'm excited.
I can actually take my
You're
hand out of it, man. Like it looks fantastic. It looks
You're going to use it. I'm going to give it to you. I'm going to look forward to you using it, dude.
fucking A, man. Like, oh man. I thought I was doing well, programming the bots and shit, but this is just a fucking different new level, man. Like, congratulations, like, man.
It's a lot of work.
Great, man. Looks great.
Thank you, brother. See you guys next week.
Hey, man. See ya.